There are several methods available for paying someone with a credit card, each offering different levels of convenience, security, and cost. Let's explore the main categories of payment methods available today. Credit card payments can be organized into four main categories. Mobile payment apps are the most popular, followed by digital wallets, online platforms, and direct payment methods. Mobile payment apps are the most popular method for peer-to-peer payments. Venmo, PayPal, Cash App, and Zelle dominate this space, allowing users to send money quickly using their smartphones. Digital wallets like Apple Pay, Google Pay, and Samsung Pay offer secure contactless payments. These platforms use biometric authentication and integrate seamlessly with their respective device ecosystems. Online payment platforms like Stripe and Square are designed for business transactions and e-commerce. They handle merchant payments, business-to-business transfers, and integrate with online stores and websites. Direct payment methods include cash advances, balance transfers, and adding authorized users. Cash advances let you withdraw money from your credit line, balance transfers move credit to another account, and authorized users give someone access to your credit card. These methods typically have higher fees and interest rates. The peer-to-peer payment market has reached massive scale. In 2024, the global market size hit $2.3 trillion. Mobile devices now account for 89% of all peer-to-peer payments, and 34% of these payments use credit cards as the funding source. Understanding the costs associated with credit card payments is crucial for making informed financial decisions. Different payment methods come with varying fee structures that can significantly impact your transactions. Standard peer-to-peer fees for instant credit card transfers typically range from 2.9% to 3.5%. This means on a $100 payment, you could pay up to $3.50 in fees. Bank transfers are usually free but require patience, taking 1 to 3 business days to complete. This trade-off between cost and speed is a key consideration for users. International transfers carry higher costs, typically 3 to 5% plus foreign exchange rates. Cash advances from credit cards are even more expensive, with fees of 3 to 5% plus higher interest rates. Security has become paramount in digital payments. Modern payment platforms implement multiple layers of protection to safeguard your financial information and transactions. Two-factor authentication is now standard across all major payment platforms. This process requires both your password and a secondary verification method, typically sent to your mobile device. End-to-end encryption protects your transaction data during transfer. This means your payment information is scrambled and can only be read by the intended recipient, making it virtually impossible for hackers to intercept. Additional security features include biometric authentication using fingerprints or face recognition, purchase protection services, and comprehensive dispute resolution systems to help resolve transaction issues. The payment industry is rapidly evolving with emerging technologies that promise to revolutionize how we handle financial transactions. These innovations focus on speed, security, and user experience. Blockchain technology is being integrated into payment systems to provide faster, more secure, and cost-effective transactions. Major companies like Visa and PayPal are already implementing blockchain solutions. Artificial intelligence is powering smart budgeting features and fraud detection systems. These AI systems can analyze spending patterns and detect suspicious activity in real time, providing better financial insights and security. Consumer preferences are shifting toward instant payments, with 78% of users preferring immediate transfers despite higher fees. This trend is driving innovation in real-time payment systems. Looking ahead, central bank digital currencies and augmented reality payment systems represent the next frontier. CBDCs will integrate with existing platforms, while AR technology will provide immersive payment experiences and enhanced transaction visualization. These technological advances, combined with enhanced security measures and evolving user preferences, are shaping a future where digital payments become even more seamless, secure, and integrated into our daily lives.